Hey there, everybody. So, I've collected comics most of my life. As I mentioned in another video earlier this year, I kind of looked at my savings, looked at the market, thought, you know what? Let's diversify into comics. Kind of the way people buy and hold stocks. And sensible idea, right? There's a catch. So, high-end comic books don't behave like stocks. And my amazing Fantasy 15 taught me that in real time. Welcome to the Intelligent Comic Book Investor Show. I'm Vince with Really Bad Comics. We talk numbers, real mistakes, real strategies for comic investing. No hype here, folks. If you're holding a major grail or thinking about buying one, so this episode might actually save you 5 figures, or at least a few headaches, as the case may be. So let me set this up. So in March, I decided to treat comics like a long-term equity position. Buy quality, hold it for a few years, exit with a gain. My first pickup was Tomb of Dracula 10. Second was the headliner, Amazing Fantasy 15 CGC 5.0. Let me show you that comic. Okay? It's really beautiful. So I mean, it's got some. So this comic and comics around this era that were produced by Marvel, they're noted for like this thing called Marvel chipping on the right, and this definitely had some Marvel chipping there. If I kind of zoom in, you'll see that right there, some Marvel chipping. Otherwise, honestly, it was in really good shape. The colors were great. Colors were fantastic, actually. I thought it was a fantastic buy for a 5.0. I still do, actually. So as a result, when I bought it, I mean, I still am really happy with the fact that I bought it. And the idea of holding it as a long-term equity, I mean, that's plan sounds fine. In practice, I learned 4 truths really fast. The first thing, comics are not liquid. There's no cash basis for a comic book. Like you buy a stock, you sell a stock, it's immediate because there's cash basis underneath it. There's no cash basis for a comic book. These comic books, even these comic books, so Amazing Fantasy 15, the very first appearance of Spider-Man, it's the king of the Silver Age, and in spite of that, it can take a while to sell. It could. There's no cash. The second thing, no cash yield. In other words, unlike stocks or like a money market fund, a slab doesn't spit off dividends. There's no AF15 ETF you can like rebalance in one tap. There's a tiny buyer pool. That's number 3. Not many people are ready to wire $40,000+ for a single comic book. And then the other thing, fee gravity is real. So this is why, you really do need to hold on to a comic book over time so that it can appreciate, because fee gravity between like platform you're going to sell it on, like eBay, payment, how are they going to pay for it? Like, are there credit card fees? Shipping is a cost. Insurance, like, so your homeowner's insurance won't protect the comic book. You need specific collectible insurance for that. And sometimes you have an extra like consignment fee or an auction fee that takes a bite out of your like $44,000 sale, and those fees can be massive. And so when you consider all that, I told you why I bought it. I recently sold my AF15. So why did I sell it? Why sell a crown jewel? Especially at a small loss, because I lost about $1,000 And I'll tell you why I sold it. Because of risk. And specifically, functionally, the book was acting like cash in my portfolio, just with more ways to go wrong. So what that means is, when I buy a stock, I buy and hold. When I buy an ETF, I buy and hold. But there's just so much more that can go wrong with a comic book, and I'm gonna help you understand that. What's the first thing? Opportunity cost. So it doesn't make sense for me to hold a 5-figure comic book long term when I can earn roughly 3.5 to 4% in a plain money market account that does essentially absolutely nothing. I mean, a $20 to $50,000 book with zero cash flow literally has to appreciate just to keep pace with that baseline. And an AF-15 isn't a book you can really churn unless you bought it at a screaming discount. And if you did, odds are there's probably a story behind that copy. So that's the first thing of why I sold. Second thing, volatility. Here's what the tape's been like. When I say the tape, here's what the price has been like for CGC 5.0s. So we've seen different copies around the low to mid 40s. We've seen a swing up near 50 and back down into the high 30s, low 40s, and then recovery spurts. There's so much volatility in a comic book that's typically worth over $10,000. I did not know that, and I do now. In plain English, a 20 to 50% swing over a typical cycle is normal. So if you're not prepared for a 30% drawdown from a local high, a 6-figure grail is going to test your stomach. So why is the volatility so bouncy? 4 reasons, really. First, cycle and liquidity. In 2021, 2022 comic book boom, it really pulled prices up. And then the 2023, 2024, and even 2025 cool off pulled those prices down. Mid grades, when I say mid grade, because of 5.0, CGC-graded 5.0 is considered mid grade. A mid grade trade, it's these things trade often enough to show a mood, like quickly, whether it's up, whether it's down. So cycle and liquidity is the first thing. Second, venue effects. In other words, timed auctions versus fixed price versus private deals can move realized prices 5 to 20% for copies that look the same. And so when I say that, timed auctions versus like fixed price versus private deals. So if I was going to sell this with an expert like Heritage Auctions, Comic Link, they need prep time to be able to showcase that book, especially if they want to maximize the income. They also don't want multiple copies of that same grade in the same auction price, in the same auction, because they're going to compete and fight each other and bring each other down. So venue effects can play a huge role in that. But if you're just selling it, on eBay, shit, there could be upwards of 3 to 5 at any one time that you're competing with on eBay. The third thing, copy-specific premiums. So page color, like mine had great page color, great centering. I think it had good eye appeal, but again, that's in the eye of the beholder. Also, page color like off-white to white. Like there was just maybe a month and a half ago, there was a CGC 5.0 AF-15 that sold for $34,800 on Heritage Auctions. It was cream to off-white. Mine was white to off-white. Is it going to make a $10,000 difference? Shouldn't. But there's no escaping the fact that a lot of people did not want to pay more than $35,000 for that copy. And that creates volatility, because what that does is it pulls the initial price down. And that can happen within a single grade. So where I bought mine for like around 45.5, that particular comic, was purchased for 34.8. Just so much volatility. The fourth thing, the people think like an AF-15 is rare. The supply of these things isn't exactly microscopic. In almost every auction, you can buy an AF-15. Maybe not at a 5.0, but at some grade, you should be able to find one. I would say an Amazing Fantasy 15 I'm not sure it's even scarce. It's certainly not unique. And so the question is, there are usually multiple copies like available across many venues, and there's so many more data points. And so how many visible swings exist from platform to platform? So when I looked at those things, the volatility, as well as the opportunity cost of owning that book, when I weighed all that, the question for me became really simple. Do I want this much passive risk sitting in a non-yielding asset? And the answer for me was no. So let's go through the sale. So I sold my copy for $43,950. Now, after fees, after costs, I did take a loss. Do I regret it? Honestly, no. It realigned my portfolio to match how I want to operate. So when I owned this particular copy, my financial portfolio was about 80% stocks, ETFs, index funds, money market accounts, that kind of thing. It was about 80% regular, traditional financial holdings and 20% comic books. Now, the way I rebalanced it, it's more like 90% traditional financial holdings and 10% comic books. So what am I doing now? So I reallocated all that, as I mentioned, so like 90% and 10%. And what I'm also doing when I focus on my comic book investments, I'm shifting my focus to something that the that experts refer to as optional investment grade. Optional investment grade is a sweet spot grade where books demand is broad enough to be liquid, but the price isn't so high that the buyer pool shrinks to like just a handful of whales. I also made another mistake early on. I bought really way too many top of the market pieces where every bid increment is an extra $1,000 of risk. Optimal grades let you move like in and out of a particular comic book way more efficiently. Folks, if you want a whole episode of like identifying optimal investment grade with examples of how to spot it, like eye appeal outliers, tell me in the comments. I'll do it. Now, what's my advice to you if you're eyeing a major grail like an AF-15? If you're considering an Amazing Fantasy 15 or a similar 5 or 6 figure tier grail, here's what you should do. First, set expectations for yourself. Plan on like 20 to 35% price swings over the cycle of time that you're going to own this book. And when you set expectations, also set expectations of what you're going to buy it at, because your entry price matters. If you buy it at what's considered to be a discount, and I'll be candid, it's hard to buy an AF-15 at a discount because there's so much in demand. When you buy it at a discount, you can turn a long game of wait to break even into, okay, I've got some freedom now and I can move more efficiently with regard to when I want to sell, if you don't. The third thing that you need to set expectations for is think in multi-year hold periods, not in months. but also buy it with an exit plan in mind. So one of the things you need to set expectation for is how you're going to sell it. And then the last thing is buy the copy of the book, not just the grade. So centering, like attractive page color, in my opinion, I would stay away. There's no reason if you're going to spend 5-6 figures of your hard-earned money into a comic book, do not buy cream to off-white. Off-white is like it's almost like the baseline, but if you can, but personally, I would the floor for you would be to buy off-white to white. And if you can find white color pages, that's awesome. Because these details are going to add liquidity and it's going to protect against your downside for the book. I would absolutely stay away also from qualified or restored copies unless you truly understand the pricing for those. Also, know your exit math before you buy it. Before you wire the funds, write this on paper. What's the expected sale price? What are the platform fees? What are your payment fees? What's your shipping? What's your insurance? What's your potential taxes or commissions? That's going to be your net value. Expected sale price minus platform fees, minus payment fees, minus shipping, minus insurance, minus your potential taxes. That's going to be the net of the book. And if that net doesn't clear your basis, plus your target margin, you're going to have to pass for that. Or do what I did, take a short loss with the idea that, you know what, I'm going to learn something here and I'm going to get myself out of a bunch of risk that I didn't really want to be in anyway. There's no reason why you cannot wait for a better copy at a better number, because let me tell you, folks, like I said, these things aren't scarce. Another thing, I'm just going to harp on this a little bit. Your opportunity cost. Before you spend 4, or I should say 5 or 6 figures on a comic book, keep in mind that your cash can earn 4% doing absolutely nothing. A non-yielding collectible, like an AF-15, as fucking awesome as it is, it needs either a realistic appreciation path or it has to play like a strategic role in your portfolio. Is it brand? Like, are you diversifying because you want some Marvel stuff as opposed to DC stuff? Does it bring you a certain amount of joy? And if it does, I'm not going to say don't buy it, but you're more of a collector at that point. And I'm not saying I'm not a collector. However, I'm way more of an investor than a collector. And it helps for you to know exactly who you are, because that's going to justify the hold beyond like the pure return on investment. So what's my takeaway? Selling an Amazing Fantasy 15 at a small loss wasn't a defeat. It was a clarity moment. And comics are an amazing part of a diversified life for me. And for me also, it should be about 10% of a diversified portfolio. They're not stocks, they're not cash, and they're definitely not instant liquidity. Treat them, though, with the same discipline you'd bring to any 5-figure position, and you'll sleep better. Like, for instance, real estate is somewhat the same thing. You are unable to just liquidate like you can a stock. It's way easier. Find a real estate agent and they'll sell it for you. But again, there's so much, having sold a home, I'll tell you, there's so much work that goes into it that it's certainly not as liquid a position as many real estate will say it is. So, but if you follow these steps, you're going to sleep better, whether you're, buying, holding, or deciding to sell. Folks, let me tell you something. I'm wanting to build a community here around comic book investing. And if this helped, I want you to leave a review, share it with a fellow collector or investor. If you have questions about optimal investment grades or building like a seller's checklist, like what needs to be present for you to sell something, I want you to drop it in the comments below, and I'll build a full episode. I'm Vince with Really Bad Comics. Thanks for listening and happy hunting. Oh, by the way, before I forget, this episode is for education and entertainment purposes only. It's not financial advice. Do your own fucking research, okay? Consult a professional before making investment decisions. With that, folks, thank you, and we'll chat with you soon.